In today's episode, I'm going to talk about what most people would say is the absolute worst part of doing a small account challenge. The worst part is that you don't have a lot of money in the account, but I'm going to turn lemons into lemonade. And I'm going to tell you that in my opinion, I actually believe that having a small account is one of the best things you can do, because if you can prove success in a small account, if you can make it here, you can make it anywhere. That's the expression about New York City, right? Well, with a small account, if you can make it in a small account, man, you are setting yourself up so well for success. So let me talk about how what a lot of people think is the worst part of having a small account, which is not having a lot of money, is actually its most redeeming aspect and may actually put you at an advantage over traders, get this, who have more money. So when it comes to how much money you have in your account, size does not matter. I really firmly believe that. And this comes from my own experience trading in 7-figure accounts and trading in accounts as small as $500. So right now I'm in the middle of a small account challenge. Today is day 5 and it is the biggest green day so far. But you know what? In my main account, today wasn't such a great day. It wasn't a great day because although I had a couple of nice trades to start the day, I actually made my way to double my daily goal. You know what I ended up doing? I overtraded and I pretty much gave it all back. Now I still finished green. It wasn't that bad of a day, but the big picture is I gave back a lot of profit. Now that's something that doesn't happen very often in a small account for one very important reason. When you're trading in a small account, like I am right now with Thinkorswim, let's recap. What kind of account am I trading in at Thinkorswim? It's a cash account. A cash account is one of the best types of accounts for beginner traders because once you run out of cash, you can't take any more trades. So inherently, you have guardrails on your account. Now, I'll say for someone that has a lot of experience, a cash account is going to slow you down because you can't trade as frequently as you want. So there are some traders who will practice in a simulator for several months. They'll get really good. Maybe they'll trade in a cash account for a couple of weeks. And then they say, all right, I need to sign up and use a margin account that will let me trade a lot. But the only way you can trade with margin with less than $25,000 is if you're trading with an international broker dealer, because all the US broker dealers enforce the $25,000 PDT, pattern day trader minimum balance. So if you don't have $25,000, you can't day trade in a margin account. So what a lot of US traders end up doing, therefore, is exactly what I'm doing with this Thinkorswim challenge. They fund a cash account, whether it's with Thinkorswim or it's with E-Trade or any of the other brokers, and they're restricted to just trading with settled cash. So the way this works in this account right here, as of today, let's see, from when we include today's profit. So my goal for the small account challenge, by the way, is to grow the account to $25,000. I am currently, after today's profit, at $16,747.31, which means tomorrow morning, I will have $16,700 of buying power. So what I'm going to do tomorrow, and this has been my approach every day during this challenge, is I look at my balance and I say, okay, I've got 16,000 and some change, right? So what I now know is if I see a stock on my scanners that's $8 a share, how many shares am I going to buy? Times 2. I'm going to buy 2,000 shares and I can only take one trade. I'm going to take one trade. It's going to be $16,000 basically in the trade. I'll get in, let's say at $8 with 2,000 shares, and my goal is 20 cents per share profit. So if it goes up to $8.20, I'm going to take the profit out. That's $400 of profit. Boom, I'm done. One trade a day. That's it. Now, yesterday, I took that one trade, and if you recall from watching episode 4, you'll know that I made about $277. You know what? I got that one trade. I got in, I got out. I used all my buying power, and then unfortunately, that one trade didn't end up being like a huge winner, but there was nothing I could do about it. I couldn't take another trade. I had to just wait. And that right there is what I actually think is one of the best things about having a small account. It forces you to be disciplined. Something that I was thinking about recently was sort of the different experience that you have coming into trading depending on your age. And I was thinking back to what it was like when I got started. And when I got started, I was in my 20s learning how to trade. And like a lot of people that are in their 20s, I didn't have a lot of money. So the money that I had in my account it was very precious, and I had to be very, very careful. I couldn't afford to take a lot of losses. And what I realized was that by having a small account, it almost made it so one mistake put me at rock bottom. But here's the amazing thing about hitting rock bottom. When you hit rock bottom, when you blow up your account, some of you guys maybe have blown up an account before. And look, if you had a $500 account and it's gone, you blew it up. But the experience of blowing up an account doesn't matter really whether it's $500, $5,000, or it's $50,000. The experience of I went to zero because I screwed up forces you to take a real look in the mirror and ask yourself, what am I doing right now that's working? And let's be real, what am I doing that's not working? And here's the thing that I fear. Sometimes traders who come into the market who are a bit older, in their 40s or in their 50s or even 60s or 70s, whatever the case may be, they may have a larger account, an account that has profit that they've accumulated over years and years of maybe retirement contributions or whatever the case is. And the problem with that is when you start with a large account, you can afford to make a lot of mistakes. You can afford to be really sloppy. And sometimes I see traders that it seems that they have more money than common sense, because the right way to learn isn't to start with a six-figure account. Now, a lot of us start with small accounts when we're younger, in your 20s or whatever your age might be, because of just the reality that we don't have a lot of money. And the problem is a lot of us look at that small account as being, kind of like we're at a disadvantage. And I want to try to sort of flip that and say that, in fact, I think trading with a small account, what most people would say is the worst part, that you don't have a lot of money, that is actually your secret power, that is an inherent advantage. And I would go so far as to say that I wonder if people who start with small accounts have more success long-term than people who start with larger accounts. Now, I don't know the answer to that question. I don't know that anyone does, but here's my reasoning for that thought process. My thought is that when you start with a small account, you focus, invariably, you have no choice, but to focus on the highest quality setups. So if we take a step back right now and we look at this small account challenge that I'm in the middle of, and we pull up my metrics, what you'll see is that I'm currently on day 5. So this is day 1, day 2, day 3, day 4, and day 5, just with the dashes there. So in this challenge so far, on day 1, I made $398. Day 2, $526, day 3, $518, day 4 yesterday, $277, and now day 5 today, almost $2,000. Now, on the first day, I actually was able to afford to take 2 trades. And it just so happened that both of the trades were with on a lower price stock and where I didn't take enough shares to use all my buying power. So I was able to take 2 trades. But yesterday I could only afford 1 trade, and the other 2 days I could only afford 1 trade. And today was the same way. And now I contrast that with what I see a lot of traders do, and maybe you've experienced this yourself, whether you have a small account or a big account. But I did it today, even in my own account, where I had a great day, and then somehow I managed to throw it all away. What happened to me today was I fell victim to a very common experience in trading, which is I started to spiral, right? So let's jump on the whiteboard and talk about this spiral effect. And this is one of the things that is so nice about a small account, because it prevents spiraling. So what happened to me today in my big account was I started pretty nicely. I started with trade number 1, which was $1,250. Trade 2 was another $1,250. So I was up $2,500 after the first 2 trades. And then I took a few more trades, and next thing you know, I was up $5K, and then I was up $8K, and then I was up $10K. And I was like, holy smokes, I'm starting to really pick up some momentum. And then in one trade, I went minus $2K. I gave back 20% of my profit. And that right there, you know what that did? Immediately, the second it happened, I felt my blood pressure kind of pick up. I felt my heart rate pick up. All of a sudden, I felt tense. I felt like I wanted to make back immediately the $2,000 I had just lost. I'd lost $2,000. It was a frustrating trade, and I was like, I want that money back. And so when you have that feeling, what do? If you have the feeling strong enough that you want the money back, how do you get the money back? You have to take another trade. And if you really have that feeling strongly, then you're not going to wait patiently. You're not going to be calm, cool, collected till the next trade comes along. You're going to jump into another trade right now. Anything that's squeezing at this moment, you're going to jump into. And that's exactly what I did. And then you know what happened? I lost another 2K. So I lost another 2K. And now all of a sudden I'm going from 10 to, it's dropping down. And I had another 3K loss. So all of a sudden I go from $10,000 on the day down to a low of being green only, well, I guess at this point I was green about 3K or something like that. And at that point, I was so emotionally triggered that I say, you know what, I'm taking another trade. Next thing you know, I go down to 0 on the day. And then I get a couple more trades and I end up making my way back up towards $5,000 on the day. But the problem was here is I was spiraling. And although I'm fortunate that I finished the day up just under my daily goal, it could have just as easily gone the other way. And this is a phenomenon that happens so often with not with small account traders, but with beginner traders in margin accounts. Because in a margin account, you can day trade as much as you want. You can just keep trading and trading and trading and trading. And so we go back and we say, this was the spot right here where everything kind of fell apart. It was this one trade. Now, one of the things that I really like about trading in a small account, and specifically a cash account, is that the strategy calls for just one trade a day. So for those of you guys who are very familiar with my strategy, it goes without saying, but my focus each day is, of course, to try to grow my account and to try to generate a profit. So with this small account challenge, my goal is to grow the account, and it still is, to $25,000. And that's my ultimate goal. And I'd like to do it as quickly as possible. However, this account, I happened to fund a retirement account, and the contribution I made is the maximum contribution that I can make for the entire year. So I cannot add more money into this account if I lose the money that's in there so far. And so because this small account can't get refunded if I screw up until next year, the stakes feel really high. Just like having a real small account, just like having a real small account as if it's my only account and I can't afford to add more money. So whether it's because you can't afford or because you're actually restricted as a result of the contribution limits, it doesn't really matter. The situation is the same, which is I have a small account and I cannot add more money. So I said, for this challenge, I have to create a trading plan that works within these restrictions. And I think that this is actually one of the best plans that a beginner trader can adopt. So I'm going to share that plan with you right here. So I said each day, I'm going to start with step one. Step one, high level. And maybe before I do that, I'll just do overview of the small account challenge. All right. So the small account challenge overview goal is grow account, basically double the account, grow it 100%, and get to $25,000. That's my profit target. And that's number one. And then number two, to trade momentum. So I'm going to be a trend-based trader, trading stocks that are moving higher, right? I want to buy the dip here and sell higher. Buy the dip, sell higher. So I'm trading momentum, and I'm going to focus on trading stocks that can go up at least, I would say, 50% on the day. And I know some of you guys are gonna be like, that's crazy, but I'm gonna show you that this is actually working really well. And I'm finding stocks like this pretty much every single day. So to double the account, grow the account to $25,000, trading momentum and trading stocks that have the potential to go up 50% on the day. And my hope, my kind of aspirational goal was, I was thinking daily goal for every day I trade would be around $200 sort of minimum. And my goal is, hopefully $1,000 per week. So I thought if I could do $1,000 a week, then, $1,000 a week, I did my contribution max. So that means I have to grow the account. It's going to take 15 weeks or so to grow the account up to this level. That's, approximately what I was thinking, 12, 15 weeks. And it'll depend. Some weeks might be faster, some might be a little bit slower. So this is sort of my overview. And in a sense, this is like my high level objective for the challenge. Okay, so now what's the actual plan and strategy that I'm going to use to get there? And this is actually the same strategy that I share with so many of our members here at Warrior Trading, because this is something that I've done many times before. This is, of course, not my first small account challenge. For those of you guys that aren't familiar, and I'll just share it, what do we have here? How did this end up here? Oh, this is my audit. I always keep it on my desk. This is a copy of an independent accountant's report verifying that in January of 2017, I funded an account with $583. So $583 was my starting balance. And by the end of the year, I had grown the account to $335,000 of profit. The next year I made $500,000. I continued trading in this account, growing in this account. I'm still trading in it to this day. And I've made over $10 million in net profit, net of fees and commissions, which is an average return of $127,000 per month and a 64% average monthly return, because I take the profit out of that account and I roll it over into longer term accounts for long-term investing. So small account challenges are nothing new to me, but in the past, when I've done small account challenges, I used a margin account. I used the international margin account, and my feeling at that time was I was trying to see how fast I could grow the account. And if you really are going for speed, you got to use the best tools that will allow you to trade as quickly as possible. Now, we're free to choose to use an international account if we want to, but for this challenge, I said, I'll use a US account, cash only, and I'm going to do things a little differently. So for this challenge, step one is to find the big percentage gainers, right? That's my first goal each day. So if we use today as a case study, we're going to look at today's trades, which you can see I traded this stock NVVE right here. So I'll move this, I'll just put it right there for now. So this morning when I first sat down at my trading station here, I knew I had about $14,000 in the account. And so I was already sort of thinking about what types of stocks should I trade. And I thought to myself, well, with $14,000 in the account today, I'm probably going to be best off trading something $14,000. I can't trade anything if I can't take at least 1,000 shares. That's what I sort of said is my minimum. So based on that, I'm looking for stocks that are priced under $14 a share. So 14, pretty much my cutoff. So this morning, when I pulled up the scans, I had seen that yesterday, GLMD had made this really incredible move. And there's no doubt about it. This thing, GLMD yesterday, did make a phenomenal move. The problem, of course, is that it was quite expensive. And so for me to make $2,000 on a $20 stock, well, I would need to buy 500 shares and get $4 a share. I just didn't think that that was a realistic ask. So I said, I can't trade a stock like GLMD. So when I first sat down this morning, I saw PRTG was our leading percentage gainer. And my concern with PRTG this morning was that I looked at it and I said, you know, this one's going to be too expensive for me. It's already a little too expensive. Now, it wasn't quite over $14 a share. You can see here, kind of squeezed up to a high of 22. And then pre-market, it was back down here between 12 and 13. But I just felt like, you know, this one's a little too expensive. Am I really going to be able to manage my risk on it? And I said, I don't think I will. And for this challenge, what I really want to do is I want to trade the front side of the move. So the front side of the move means I'm focusing on trading right in here. That is the front side of the move. The first pullback, the second pullback, that's the front side of the move right there. So the front side of the move on this, well, it's pretty much already done. It was over. So then I saw another stock popped up. Was it VOSS? No, it was VVOS. So I saw VVOS pop up and I thought, well, it's kind of interesting, but not quite sure. It wasn't moving quickly enough. So I said, no, that one's not going to work. And then NVVE, this stock, this ended up making a really nice move. Now, the interesting thing with this one is it sort of popped up a couple times. It pops up once right here and it pulls back, but only for a second. That was at like 4:40 in the morning. It was super early. Then it pops up again here from 450 up to 582, and then it dips down. And then it comes up again and it breaks 582, and this thing squeezes all the way up to 582, to 6, to 650, to 7, to 750. Hits a high right here for just under $8 a share. This is a really nice move. So this little window right in here, check out the MACD. MACD is positive through this whole range. So the MACD is above the signal line, increasing volume, light volume pullback, increasing volume, little light volume pullback, and then had a chance to move higher, and it failed. So at that point, this stock, let's use our measuring tape. Let's see how much this was up on the day. So this stock went from, 425 here, ended up being up 79% right there, but the previous day was down around 440. So this stock was up about 100%. Speaking of a big percentage mover, look at this stock right now. This stock squeezing up in the after hours session from 250 up to 3. So that's a big percentage move. That's exactly what we like. Now, the way I find a stock like this is it's hitting my scanners right here. So when I see a stock hitting my scanners, just like NVVE did earlier today, I pull it up, I check to see what's the news. I see, okay, it's got a headline, 401, and now I'm watching to see if there's an opportunity to buy the dip for the squeeze higher. Now, of course, in this particular case, I can't trade it. I can't trade it because I've already used my one trade of the day. I already used it on NVVE, but this is what we're looking for. We're looking for stocks that are squeezing up. And my goal is to trade one A quality setup each day, to take full size, to be aggressive, but I can only take one trade, which means each day there are one of two outcomes. Either I'm green or I'm red. Essentially, I suppose I could be break even, but most likely it's not likely. Most likely I'm green or red. To the extent of how green or red, that'll depend, of course, on the trade and how well I manage my risk. But I'll either be green or red, and then that's it. That's it for the day. I will not be able to take another trade, and I think that that's really important discipline. So step one is to find the big percentage gainers, and of course I'm going to use my stock scanners to do that. So I'm using my scanners to find these big percentage movers, which is how I found NVVE this morning. On the scanner, squeezing up, lower float stock with a nice daily chart. Now, as part of my due diligence, step one is just to find the stock that's moving. So then step two here is to actually do my due diligence. So step two is DD. So due diligence comes in two forms. Part one is fundamental, and part two is technical. So when we do part one, fundamental analysis, what I'm going to do is I'm going to pull up the stock and I'm going to ask myself, what is the catalyst right here that's moving this higher? So in the case of XCUR, I pull this up, I see that there's a headline here, receives extension from NASDAQ hearings panel. Now, this is a little tricky. As previously mentioned, the company has regained compliance with NASDAQ's minimum price requirement and exchanged approximately $1 million of indebtedness for equity at a conversion price of $3 a share. So they probably did some type of reverse split that got their price back above the minimum $1 threshold. So usually a company regaining compliance is not the biggest headline, if I'm going to be honest. And sometimes we'll see stocks that pop up and they don't even have any news at all. They just pop up, they start squeezing, and it's not really clear what the catalyst is. But if a stock is up 50%, if it's up 60%, if it's up 100%, then just the fact that it's up that much sort of becomes a bit of its own catalyst. And so that was sort of the case with NVVE, and maybe it would be the case with this stock as well. So first step is doing a little bit of due diligence. Now, if I'm really curious, I can actually pull up this website called BAM SEC, and I can pull up the filings on a stock, NVVE. I can look at their quarterly filings. I can see what their balance sheet looks like. I can see how much cash they have on their balance sheet. So I get to see how much cash does this company have. And then after I see what their total assets are, and I can look at their long-term liabilities, see what kind of debt they have, then we can scroll down and we can actually check their profit loss. And when we check their profit loss, we can see how much money is this company making or losing each quarter. When I see the company is losing money each quarter, and the amount that they're losing is in excess of the amount of cash they have, then that makes me wonder if this is the type of company that will take this opportunity to sell shares onto the market. And so one of the things that I'll look for is a S1 or an S3, or a shelf registration, which would give the company the right to sell more shares on the market. Now, whether or not we see that on NVVE, that they actually did execute a secondary offering and sell more shares on the market, I'm not sure yet. We haven't seen that headline yet. But one thing that I was a little concerned about with this stock in terms of holding it long term was the possibility that we would see a full day of selling. And this is what sometimes happens. You get an initial move up and then it starts to unwind. And so one of the things that's really important is that you're very disciplined about getting in, getting out, and not overstaying your welcome. I'll show you another example of a stock that made a pretty incredible move. This one, TNON, look at this move right here. This is absolutely unbelievable, really. This stock squeezed up from about $10 a share. It squeezes all the way up to 130, and then it slowly unwinds. Now, look, if it wants to unwind, that's fine. There's two ways to trade this. You can buy it, and you can capitalize on that initial spike right up, or you could short it, and you could benefit on the unwind coming back down. Now, one of the things you've got to be really careful about with shorting these stocks is that you don't want to get in front of a freight train. And some of these go a lot higher than you might expect. In fact, there are some people that tried shorting it when it was up at $20 and $30 a share because they thought it was extended then. Well, this, as it turns out, was willing to get a whole lot more extended. And if you shorted 10,000 shares of something like this, you could easily be down $1 million. $1 million is a huge loss. So for me, because of the type of account that I'm trading in, it's a retirement account. You are not allowed to short stocks in a retirement account. So my strategy is only trading to the long side. So for a setup like this, I would be buying it to the long side, and then I wouldn't trade it coming back down. But I would have to remind myself not to overstay my welcome. So in the case of NVVE today, I pull up the stock. I see that it's squeezing higher. I see that it's got a nice chart. I didn't see a fundamental catalyst to support the move, and that gave me cause for reason to be a bit cautious and sort of take it a little bit slow. But nonetheless, we did get some really nice price action out of it, and we got this really nice squeeze here up to 757. So part one of step two is to do my due diligence and to try to decide, is this an A quality setup? Is the stock, does it meet my profile of having the potential to make a big move? Now, for those of you guys who haven't already checked this out, pinned to the top comment and linked in the description is a set of downloads that you guys can have for free. These are free resources that you can use in your own trading. And one of them is a PDF that breaks down my 5 pillars of stock selection, the 5 criteria that I look for to decide whether or not I think a stock has the potential to go up 50% or higher. Because here's something really interesting. If you look at all the stocks that go up 50%, 100% or more, they all share a similar set of characteristics. And I've taken all those characteristics and created essentially the profile of stocks that can make big moves. And those are the only stocks that I want to trade on a daily basis in general. But during this type of small account challenge, absolutely. There's no point in me wasting my one trade of the day on a stock where I buy at $5 and I sell it at $5.01 for a 1 penny profit. I want to find stocks that I can buy at $4.50 or $4.80 like this, or $5, and sell at $6 or $7 or $8 a share. That's the only way I'm going to grow my account. Now, I could do it trading penny stocks, and I will be willing to trade penny stocks if we see one that looks good. But what I also find is that stocks between $3 and $8, that can be a really nice sweet spot where you can get 50 cents to $1 a share really quickly. And those are the types of gains that I need in this small account challenge. So now, once I've done part one of fundamental, and so anyways, so 2 things. So number one, so make sure you download the small account challenge PDF. That's going to be linked in the description as well. There's also the micro pullback PDF, and there's also my Thinkorswim layout, in addition to the stock selection PDF. So all of those PDFs are part of a bundle, a package that you guys can download. So make sure you check those out. All right. So number one, I make sure a stock meets my profile for having the potential to go up 50% or higher. It's got the fundamental catalyst, or it's got the sort of criteria that matches that profile. And then part 2 of due diligence is getting into technical analysis. Now, in the case of NVVE, one of the first things I did was check the daily chart. and you can see all these blue lines on the daily chart. I'm going to get rid of all of them, and I'm going to show you how I got them. So when I first pulled up the daily chart, I see this S right here. And what that refers to is stock split. This just had a stock split yesterday. It was a stock split of 10 to 1. And so the stock is higher by a ratio of 10 than it was just a couple days ago because of the stock split. But what also is true is the float is now 1/10. So the price goes up, the shares available go down, and shares available or float represents the supply. And so when we're talking about stocks that have the potential to squeeze up and make big moves, we need an imbalance between supply and demand. So here I look at the daily chart, I see, oh, it's a recent reverse split. Then I pull up my trend line here and I look to the left right here and up. And so I'm actually going to zoom in on this a little bit. I'm going to set it to auto. I'm going to get zoomed in. And the first thing I look at is I think, all right, well, what's the nearest candle that could be an issue? And I look at the top of that candle there at 788. And I think, all right, that could be an issue. And then I look to the left and I look up and I see, all right, there's 880. There's the high of that candle right there. Oops, let me go like this. So I'm going to just make this a little bit bigger so you can see it better. Now, before those candles, there was also a high right here at about $7. And we did struggle at 7. 7 became a bit of a resistance point. Now, I continue looking to the left and up, and I notice that that line that I drew at 880 also connects back to right here. So now you've got a bit of a double top. That reaffirms that line's even stronger. Then I draw this line here, the top of that candle, 935. And what I'm trying to do is figure out if this keeps going higher, where are we going to hit resistance? And I realize right here, we've got this large window. It was formed by this topping tail, this candle here. And this was a 16 million shares of volume candle. So it's a high volume candle for sure, had that nice move, ends up pulling back here. So then I'm thinking, all right, if it breaks that level, what do we have next? And whoa, we get into a gap. Now we get into a gap that gives us room up to right here, $31. So now I come over here and I step back and I ask myself, well, where's the 200 moving average on this? And wow, the 200 moving average all the way up there. So we've got a lot of room on the daily chart if this thing keeps squeezing. So those are the lines that I drew. This told me we don't have really a lot of nearby resistance, especially if we can get through this area. Now, unfortunately, we weren't able to get through that area. That was the first area, these 4 lines that we needed to get through, but we struggled there, and then that was it. If we had been able to get through those, we had a lot of potential up here, and then up to the 200 moving average, which was right there. So we didn't end up realizing that full potential, but that's okay. So I do the daily chart, technical analysis. I say, all right, it looks good. I like it. And then at that point, I'm getting into my 5-minute candlestick chart. And that's where I'm saying, all right, how's the 5-minute look? 5 minutes pulling away right here. That's fine. Then I'm pulling up the 1 minute and I'm saying, all right, do we have micro pullbacks on the 1 minute? What about the 10-second? And that's where I'm getting dialed in and getting ready to actually execute on the trade. Now, before I can take the trade, I've got to pull up the level 2. So the level 2 is one of the tools that I use every single day in my trading. Now, if I pull up Thinkorswim here, I'll back this out of full screen. This is my Thinkorswim window, and we'll pull up level 2 right here, and I'll show you the time and sales. So I'll make this just a little bit bigger. Now, my workflow for the most part is that I have my main account that I'm still trading in. So I can see level 2 data and time and sales in my main account. And then all I have to do in Thinkorswim is actually point and click here on the ladder. I press the control button, I click on the ladder, and boom, I'm sending an order to buy or I'm sending an order to sell. It's based on the quantity that I put in right here. And the way that I'm doing it in this case is I'm thinking, all right, oh, look at that, XCUR. So this one's continuing higher. Even though that news headline, not a crazy good headline, it's okay because this stock has that momentum. And we're in a market right now that's got a lot of momentum. So you're seeing that nice follow through, which is really good. So that's what you like to see. All right. So anyways, so NVVE right here. So I initially said, well, how many shares can I afford to buy on this? I punched in for, I think it was 3,000, something like that. I pressed the buy button, but I only got a partial fill. I was like, oh shoot, I'm only getting a partial fill. Or maybe it was 1,500 shares. So then I added a little bit more, just by clicking these buttons here. One of the problems with a fast moving stock is that as it starts to squeeze up, all of a sudden it's up to 15 cents, 20 cents, 30 cents. And now it's like, oh shoot, I don't want to chase it. So I got in as many shares as I could before it just kind of, went without me and I couldn't add anymore. So I got myself up to about 2,700 shares and I'm up almost, $2,000. So not quite $1 a share, but a pretty solid trade nonetheless. All right. So in this case here, I'm getting in by actually pointing and clicking on the ladder. I look at the level 2, I look at the spread. I see, all right, we've got, in this case right now, a 9-cent spread, but you pull up another stock like XCUR, this one's gonna have a tight spread, right? 13 cents, 4 cents, 13 by 17, 15, so 2-3 cents spread. It's got a pretty tight spread, which is good. You've got good flow, lots of buyers, lots of orders going through. This is a stock that's actively traded. And this is what we like to see. We get that first leg up, the pullback, and then the next leg higher. So that kind of next leg higher is the spot where I've been doing really well. And this right now, just as an example, is totally the front side of the move. It's going to be the front side of the move until the MACD makes its first crossover. And once you get that first crossover, then that's when I say, all right, enough's enough. I don't want to overstay my welcome. Now, the really nice thing about trading with this small account is that I get really one shot at it. I remember at one point, a few years ago, I did a cash account challenge, and I remember hesitating a bit more than during this challenge. I felt like, I've only got one trade. I really want to make it count. I would see a setup, and I'd be like, I don't know. I'm not going to take it. I'm going to save my trade. And then, oh, shoot, that one would have been great. And then the next one comes up, and I'm like, I don't know. And I was finding myself hesitating a lot. For this challenge, I've taken a little bit of a different approach. My attitude has been, I just want to try to get one trade every single day. And so in the morning, when I first sit down, I'm looking at what are the setups that we have? What are the stocks that we have? Do any of these meet my profile for having the potential to make a big move? And if one of them does, can I jump in and just get in and get out? And my feeling right now is I'm not trying to hit home runs. I'm just trying to hit consecutive base hits. That's really it. And it just so happened today that I got a really nice trade. But the idea was still just base hit. I'm going to get in. All I want is 20 cents a share of profit. I got in, and all of a sudden, it's up 30 cents, 40 cents, 50 cents. By the time I'm putting out my sell order, I'm already up 75 cents a share. I'm like, wow, this is amazing. And that's because, that's because I picked the right type of stock to trade. So the number one way you can manage risk, whether it's in a small account or a big account, is by trading the right type of stocks. That's the best thing you can do. Because even if your entry is not quite perfect, you're at least trading the right stuff. You could trade a perfect quality pattern on a low quality stock and it won't resolve. It won't work. So the quality of the stock is first, and then the patterns are secondary. Now, of course, during this challenge, I still want to take really good setups because I know I only get one shot each day. And so on the first day, the very first trade I took was a red trade. So my very first trade in this challenge was a red trade, but I didn't use all my buying power. So I was like, okay, I have this much money left that I can trade in. And I saw another setup, and so I took that next trade. Now, the reason that first trade, I didn't use all of my buying power was because I was feeling a little nervous. I'm like, okay, this is my first day, in the new account. I'm just going to use a little bit less buying power just in case I make a mistake. And I'm glad I did. That way it wouldn't be a huge loss. So that was the right move. And maybe for the first few days, I should have continued doing that. But as it turned out, day 2, day 3, day 4, and now day 5, I've just been taking one trade where I use all of my buying power. So the strategy and the plan that I put a lot of our members on at Warrior Trading is this 3-step plan. So step 1 is to find the stock that's moving. Step 2 is to do your due diligence. And then step 3 is to execute on the trade. And that's where we're using level 2 and we're using our actual order entry window. So for me, for this trade, because my trade was pre-market, I did have to go ahead and change my time in force to extended hours, right? So I changed it to extended hours. I turned on the auto send and I pointed and clicked with the control button down and boom, was able to send the order for whatever it was right there. So just like that, jumping in. If it was XCUR, it'd be the same thing. I choose the number of shares I can afford, just doing the quick math of, okay, this is how much money I have in the account. So, 3 times 5, 4 times 5. All right, can't buy 5,000, but maybe I could buy 3,000. And then I can choose to either click buy ask. The problem with clicking buy ask in Thinkorswim is that I'm not allowing myself slippage. And if I want to buy 3,000 shares and I want to get filled the full order, I want to go a couple cents above the ask. So I'm just going to move my order above the ask and click like that. So pointing and clicking has actually been faster for me with Thinkorswim, especially pre-market. So step 3 is to execute on the trade. Now, for most beginner traders, if you're trading in the simulator, there's sort of 2 phases. The first phase of trading in the simulator is to trade as much as possible because you need to gain experience. So you just get in, you get out, you get in, you get out. You trade 1,000 times a day. If you have the time to do it, you sit here all day long. Because look, even here at 4 p.m., 4:30 after hours, we have a stock moving. And a stock moving like this gives us the opportunity to study the level 2. It gives us the opportunity to practice taking some trades, to identify certain candlestick patterns. So for those of you guys who have watched the other episodes in this series, this Thinkorswim Small Account Challenge series, what candle is that right there? That's a shooting star. It's a red shooting star. We know that's a reversal indicator. The next candle goes red, confirming the reversal. We pull back. Now we're rallying back up, but with high volume red on that topping candle, that's going to create resistance. Now, it may be able to break it, but typically that's something you want to be really cautious of. So as you buy this dip, you want to be thinking, we've got some risk up here. Is it going to hold this level? Right? Little topping tail, it pulls back. So those topping tails, every time we have a topping tail like that, it's bearish. It indicates that the price is not able to hold at these levels. There are too many sellers that are coming in. So they're pulling it back down. It's just not able to support that move. So anyway, so if you're in the sim, you want to trade that sort of phase 1 as frequently as possible. Just get in, get out, gain a lot of experience. But then you have the point where you've gained your experience. You know how to get in, you know how to get out, you know how to read the market. But now you want to see if you can actually make money consistently. So now if you're trying to make money consistently in the market, you have to do things a little differently. You have to start to get things reined in, right? You've got to put the guardrails on. You've got to start to be disciplined. You can't just trade everything that's moving, right? This isn't you've got to be really focused. What am I going to trade that has, in my opinion, 90% chance of giving me a profit and putting me in the green? And so that's where we slow down. And this is where I put traders on a 1 trade per day trading plan. And I say start just for 10 days. For 10 days, take 1 trade a day and just show me what it looks like, what your metrics look like. So 10 trades, 10 days. And what I want to see is that 7 out of those 10 days are green. That's what I'd really like to see, at least 6. You got to be better than 50% because you want to build that positive feedback loop, not the negative downward spiral, but the positive feedback loop where you've got self-confidence. You know that you're right most of the time. You know what you're doing. You start trading with more size. You are more aggressive. That creates a positive feedback loop. So you've got to be right 6 or 7 out of those 10 trades. And in total, you've got to be profitable. So that means on the trades that were losers, they can't be massive losses. They have to be small losses. So if after those first 10 trades, those first 10 days, you have profit in the simulator, that's when I say, okay, it's time to flip the switch and go live. But here's the important thing. You go live in a cash account, just like I'm doing right now, and you just trade with small size, 100 shares for 10 days, and prove to me that for 10 days, trading with real money, with 100 shares, you can maintain that hot streak essentially of 60 to 70% accuracy, and that your average winners are bigger than your average losers, and that you'll have a net profit over those 10 days. Now, if you can do that, what comes next? You increase from 100 shares to 200. You do it for another 10 days. You go from 200 to 400, from 400 to 800, from 800 to 1,000 to 1,200 to 1,500 to 2,000. And you can actually make a living trading with just 1 trade a day. And what won't happen to you is you won't have a spiral. You won't have this day where all of a sudden in one day you give everything back because you got emotional, you got frustrated, you got stubborn. Now, I'm at a place where I have spirals from time to time, like I had today in my main account. I'm fortunate that I'm at a place in my career and my maturity where I have the presence of mind to know at a certain point, it's time to walk away. And so I cut my losses and I say, all right, enough's enough. I got to walk away. I can't keep going deeper and deeper into the red. I'm just going to get myself into a big jam. And so I kind of find that point where I'm like, all right, this is where I'm going to walk. But the problem is most beginner traders, they won't know when to walk away. And so what ends up happening is essentially after you have that first big loss that gets you emotionally activated, you become emotionally compromised. And now for the rest of the day, you've essentially crossed a point of no return. And you go on what a gambler would say is tilt. You've given up strategy, whatever technique that you've been using that generally works, you've thrown that away. And now you're just trading emotion. You're chasing that loss. You're just trying to make it back. Desperation, grasping for straws. And I know some of you guys know exactly what I'm talking about because you've been through it. And this is the risk with trading an account where you can trade an unlimited amount of time. You could just trade 1,000 times in a day if you want. And maybe you churn commissions if you pay commissions, or maybe not, but you just take loss after loss after loss after loss, and it's a snowball and it's a spiral and it just gets bigger and bigger and bigger. And so one of the things that I'm a big advocate of is that as a beginner trader, mindset is so important. Some people say trading is 50% skill and 50% mental. Now, I don't know about that, but what I do know is that over the years, I've seen a lot of traders who I really believe have all of the skill required to be successful, but they can't get out of their own way. They keep tripping themselves up. They overtrade. They give into emotional impulses. They spiral. And let's just say, that's happened to you. How many times has that happened to you? I couldn't even count the number of times it's happened to me, if I'm going to be honest, over my entire career. But every time it happens, boom, you take a loss. And I'm at a point now where every time it happens, of course I take a loss, but this is what my equity curve looks like. Now, if you're a beginner trader, what's your equity curve look like? Boom. Sideways, sideways, sideways. You're sideways until these big red days. And so one of the things that's interesting is if you didn't have those red days, you would be mostly going like this. And a lot of people would say, well, that's not even worth it. But you know what? This is what we call treading water. If you are keeping your head above water, survive till you thrive. As long as you're not going like this in your equity curve, I think you're doing pretty well. Because usually what happens for most traders is they start like this, then they flatten out, and then they start to improve. But inevitably, they still have those drawdowns. Now, the people who are going like this, but are still falling victim to those big emotions, they're just stair-stepping down. And so that's where you get down here, where someone who's got more discipline is right up here. So this could be minus, $1,000. It could be minus $100,000. It doesn't matter. It's if you're still stair-stepping down, you're giving into these emotional impulses here, you're just going to lose money, and it just goes lower and lower and lower. So one of the things that I think is really important is to begin trading with real money by cultivating a mindset of discipline. And I think that you could do really well with just one trade a day. Now, yes, that's a pretty tight restriction. It's a big guardrail on your account. And I'll say that no one's going to win the Tour de France with training wheels on. Right? At a certain point, you've got to be able to trust yourself to take the training wheels off. But what we know is that most traders lose money. We also know that most traders don't read candlestick charts the right way. Most traders don't know how to read level 2. Most traders don't even have a strategy. And most traders who have a strategy don't have the discipline to follow the rules. So if you've got all those first steps down, right? You know the strategy, you know how to use the right tools, then the final piece of the puzzle for you is discipline. Really, ask yourself, if you went back and you looked at all of your biggest red days, what were those days where you gave into emotional impulse? And are those days that if you had walked away sooner, you would be in a significantly different place than you are right now? Because if the answer is yes, then your number one job has to be to prevent yourself from having big red days like that in the future. Because if you could stop having those big red days, it's a game changer. And that's what it was like for me. Now, I recently, we've got a member at Warrior Trading. His name is Jess. He's got his $1.5 million badge. And we were talking about his sort of progression from being a struggling trader to a break-even trader to a profitable trader. And I asked him, I said, Jess, what was your turning point? Do you remember this was the day where everything clicked? And he said, I didn't have a turning point. Success for me, he said, was just about sucking a little bit less. And I was like, that's so interesting, because for him, what it was like, and this is having known him for a long time and spoken with him about this, is when he was getting started, a little bit of beginner's luck, as a lot of traders may have, but then kind of going into this period here, and then it's sort of break even, and then a little bit of profit, a little bit of profit, a little bit of profit. And it's just really, he's still having losses. They're just a little further between, and they're a little smaller. And one of the things that I think is that the longer you can keep your head above water, you're surviving. Survive till you thrive. You're actually learning how to survive in the market. You're learning how not to get smoked in the market. And by learning how not to get totally destroyed, by perhaps avoiding certain types of stocks, maybe stocks that are really thinly traded, or stocks that have a huge float, or stocks that have huge spreads, or whatever the case is, you learn through experience. Okay, I cannot trade that. I cannot trade that. I cannot trade that. You start eliminating some of the biggest causes of big loss, right? And so eventually you get to a point where all that's left is what's working. Now, again, this is relying on the fact that you have an actual strategy that you're trading. So those of you guys who haven't already downloaded the resources for this Thinkorswim Small Account Challenge, make sure you download that. You'll see my micro pullback strategy PDF, my stock selection PDF. I've got my Thinkorswim layout, and there's some other things in there too. So make sure you guys check that out. But assuming you have a strategy, and it's a strategy that other people are trading successfully, then the question is, how do I fill the gap, right? How do I convert my knowledge of this strategy to an actual skill so I'm trading it the right way? And then how do I maintain the discipline, the emotional strength on the days when nothing is working, to know that right now I have to walk away before things spiral? And that's the beauty of trading in a small account. That's the beauty of trading in a cash account. You only get one trade each day. You take that one trade. If it's green, awesome. If it's red, all right, I'll try again tomorrow. You take one trade and that's it. And then if you want to spend the rest of the day practicing in the simulator just to gain experience, you should, by all means. Keep practicing the simulator. But for real money, you get one trade a day. And that's how you slowly transition from phase one of trading in the sim and taking a ton of trades every single day to proving over a 10-day stretch that you can be consistent 60, 70% of the time. And then actually putting your money where your mouth is and saying, I'm going to put real money behind this and I'm going to see what I can do. So if we pull up my metrics right now for this small account challenge, I have, today's day 5. I have 6 trades that I've taken in total. My accuracy is 83%. I've got 5 winners and 1 loser. The first trade was a loser, which was bad luck. So I only have 1 consecutive loss. And now I've got 5 consecutive winners since that. Average winner, $774, which is thanks partly to today's winner being big. I mean, these are only 5 winners, so it's just averaging them. My average loser, which was the only loser I had, was $154. So right now, these are the metrics of a profitable trader. But these metrics also reflect the strategy that I'm trading. I mean, let's look at the price stock. We look at price and volume. So these are the stocks I'm trading, right? Stocks between $2 and $10. And I know that higher price stocks, I'm just not going to be able to afford them right now. So, I'm focusing on the right type of stocks that are moving, stocks that have the potential to make big moves, stocks generally that are the number 1, number 2 leading gainers in the entire market. And I'm just keeping my head down. So I'm going to keep doing this. I'm going to keep growing this account. My goal, of course, is to get it to $25,000. And I'd like to get there as quick as I can, because I do have a sense of like, this will be an awesome accomplishment to get to this level. Because once I get to $25,000, if I can do that, if I can grow this account trading 1 trade a day to $25,000, then at that point, that's when I feel like I'm ready to go ahead and use a margin account. That's when I can say, all right, let's flip the switch, turn on, now I'm above the PDT level, now I can trade more. But I think that there's a lot of room to take 1 trade a day. You can take 1 trade a day with 5,000 shares, 20 cents is $1,000. $1,000 a day, that'd be $250,000 a year if you were averaging that. Doing 1 trade a day? So this is where I sometimes think a lot of traders are making this a lot more complicated than it needs to be. Your number 1 job is to extract profit from the market. It's not to take as many trades as you possibly can. While your broker might love that you do that because they make money on payment for order flow, your job is to pull profit out of the market. So really, if you focus on highest quality setups and you just take 1 trade a day, I think you're doing great. And this right here is the small account way. Now, I'll say, when I was trading with a margin account, when I funded that $583 challenge back in 2017, it was $600 in the account and I had 6 times leverage and I could day trade. But I didn't really day trade. I still focused on only taking 1 or 2 trades a day because I wanted to grow the account as quickly as possible. And I knew that if I set my standard high quality setups, I'd only see a few each day. And so for the beginning of that challenge, I only took a few trades a day. We can actually pull up the metrics from it and I'll show you. So let's see, we'll go back to, so this is going to be, I'm going to cancel this out. So we'll go January 1st, 1/1/1/2017. And we'll just go to 1/14/2017. Just that first, those first 2 weeks or whatever it was. Oh, this thing is impossible. All right, let's do it another way. So I gotta go in here, custom range. So we're gonna go all the way back here. Now, the reason I want you to see this, and I've got another slide that I'll show you in just 1 second, where you can see some other members who have participated in this challenge, because I've encouraged other people to do the same thing. I said, guys, prove to me you could take just 1 trade a day and do well. So we'll go from there to there. We'll just apply that. All right, so just like that. All right, so now calendar. So calendar, open, and you can see 2 trades, 2 trades, 2 trades, 2 trades, 2 trades, 2 trades, 2 trades. So for the first 7 days, 2 trades a day. Then finally I had my first breakaway day, and I had to take 7 trades to make $1,900. So in some ways I'm doing a little bit better in this current challenge. And I did start with a little bit more money, but you know, I had today on day 5 already that nice big green day. So now let me pull up this other slide deck for you and I'll show you what I asked some of my members to do at Warrior Trading. So I said, guys, I want you to prove to me, I want you to test something out. I want you to show me what you can do focusing on just 1 trade a day. So I'm going to show you this slide deck here. All right, so there we go. All right, so these are members. I said, focus on just 1 trade a day. And some of this was, you know, for some of these students, it's in Sims, some of it's real money. It doesn't matter. 1 trade a day. I said, that's what you got to focus on. So 1 trade a day, that's the challenge. And for the most part, these members did a really good job with it. A couple of them were 2 trades a day. A couple of them did a bit more. But 1 trade a day, 2 trades a day, this is really solid. This is what I love to see. And this is what I want to encourage you to do. Take on that 1 trade per day challenge. Let's do a small account challenge together. I'd love to see what you guys can do. So if you found this episode interesting, I hope you will hit the thumbs up. I hope you will subscribe to the channel so you can check out more episodes about trading strategy just like this. And I want to remind you guys, as always, trading is risky. I've been doing this for a very long time. My experience is not typical. So I don't want you to assume that you'll be able to start tomorrow and grow a $500 account into $1 million. It takes time. But you know what they say? The best time to learn to trade was 5 years ago. The next best time is right now. So study up. The market's here, and we're excited to help teach you. All right, thanks as always for tuning in. I'll see you for the next episode real soon.